coming to social media for hashtags, we'd like to welcome in Megan Brantley, the VP of Research at LikeFolio.com, and we have Evelyn Baker, Fast Market Contributor, back with us. Evelyn, looking a little bit more micro.
Right, so you've talked a lot about macro today with all that's going on, but let's transition to Shake Shack, right? So I saw a lot of people talking favorably about Shake Shack on social media. And in fact, one Twitter user in July asked the company why they didn't have any delivery options, as he couldn't see their food available on any delivery app like Grubhub or Uber Eats. Well, today they answered him, and Shake Shack is teaming up with Grubhub for nationwide delivery. So Megan, I want to ask you, is your data showing that people are excited enough about Shake Shack's food to get in on these new delivery options?
Yes, it's funny that you say that. That's actually one of the, tailwinds that we're watching for Shake Shack. They have a lot going for them. Their purchase intent, especially in this quarter that's about to report, is at all-time highs. It's actually the highest quarterly purchase intent that we've ever seen for the company, so that's really promising. And when you dive into that, we looked at mentions and people are getting Shake Shack delivered. And I think that people appreciate quality. And so far, from our sentiment perspective, people perceive Shake Shack as being of high quality, and so they're willing to pay a little bit to have that delivered. So I think that that's really promising. You can see their purchase intent ramp up alongside, almost in parallel with their stock.
So Megan, I can't help myself except compare this company to another company that's relatively small in size, and that's Chipotle. Chipotle, yes. Their float on this name is only 37 million shares. Chipotle's 27 million. Those are tiny, those are microscopic in terms of size of companies. So if they get it right, which it looks like so far they're getting it right, this company can still grow substantially from when it was. But are you guys seeing them grow like they need to keep these valuations?
I think that is really the call that we're going to have to make. Their purchase intent is up 12% quarter over quarter, up 25% year over year in this, Q2 that they're about to report. But in the same time period, I think, their stock is up significantly. It's up 12% even since the end of quarter. So expectations are really high. I think that, they've been a growth story. They've been increasing stores, they've been growing and reaching new customers, but along with that comes a cost to expand to that nature. But in terms of have they really saturated the market? No. I mean, just as a caveat, we're in Louisville, Kentucky. We don't even have a Shake Shack. I couldn't order Shake Shack if I tried, and that's millions of customers who can't even purchase yet. So in terms of growth potential, I think that that's definitely still there for them.
I also saw on Twitter this morning that a new Shake Shack was just opened, the first in Utah, and the lines were apparently insane. And a lot of people were talking about that, but that has to be good news for the company, right?
No, that's
when
good.
So many people show up and stand in line.
Lines in front of your store is never a bad thing.
It is
right.
not.
And you compare them, Kevin, to Chipotle, but I saw mostly people comparing them to a company like In-N-Out Burger.
Sure.
And I have this one tweet that talks about Shake Shack's burgers specifically. And that user says, Shake Shack reports today after the bell. And while I can't offer any investing insights on this one, I can tell you that I love their burgers.
He said freaking love their burgers. So
I did some personal edits.
I mean, he was emphatic with his love of their burgers.
So Megan, you can't really compare whether you want a burrito bowl versus a burger, do you see any data from other maybe comparable burger type places that Shake Shack could take the market share from?
I think it's interesting, people want fresh ingredients and they want quality ingredients, and that's what Shake Shack has. I think it's interesting that when McDonald's, they started doing the fresh quarter pounders, we saw an increase in purchase intent for them, but I don't think that that's necessarily harmful for Shake Shack. I think really that delivery caveat that you mentioned earlier is really promising for them. In that sense, I think they're a lot like Chipotle, even in that sense, in that people, they're willing to pay that delivery fee for something that's of higher quality. Another interesting thing is that as their purchase intent reaches all-time highs, their sentiment is increasing. Typically when you see a massive influx of consumers consuming a product, you see an increase in complaints as well, because people like to complain about, if something goes wrong with their order. So the fact that as purchase intent is increasing, sentiment is increasing, more consumers are happy, that's really promising for them.
This delivery quotient that's in these things. Think about it. All these fast food chains, and that's going to be part of the trade that we set up here, they're all positive, right? Except for what? Domino's Pizza. Remember what was negative? Because delivery has now leveled the field between pizza and basically every other food group.
When we saw in Yum Brands, Pizza Hut really being the laggard of their three major brands there. But coming back to your data here, Megan, on Shake Shack, it's been an incredible story based off your data, obviously growing significantly, but the street's still looking for a 30% revenue growth as well year over year. So the expectations are still really high for this company as well. Is this one, in terms of earnings, that maybe you guys are looking for a pullback and then you'll kind of get in, or do you have kind of a feel going into this announcement?
I think that, our data is really, really positive for them. The fact that Q2 is the highest purchase intent that we've ever seen, that's not to be taken lightly. However, you can see that the stock has moved in parallel almost with our purchase intent increase. So, that's what we're trying to gauge is this already priced in? Our expectations so high that unless Shake Shack just completely blows it out of the water, there could be a pullback. So I think that that's a judgment call. But we don't show any signs of weakness. We definitely don't anticipate a bad report from Shake Shack. I think another interesting thing that maybe our data doesn't show is that last quarter, Shake Shack indicated that a lot of their growth was coming from increased ticket sizes or price increases. So, we're showing more consumers actually going to and consuming Shake Shack, but we're not necessarily measuring if they're spending more money while they're there. So if they are, that's room for potential growth for them as well.
We know that was a huge story with Starbucks, with McDonald's,
yes.
But in your data for both of those companies and in Yum Brands, you showed strong growth, and all those companies executed strongs on their reports. So based off your data, nothing to basically get us to think that won't happen with Shake Shack, but we'll find out after the bell. Megan, we got to let you go. We really appreciate it, and really good stuff today.
Yeah, thanks. Good to see you guys.
Good to see you as well. And Evelyn, we're going to have to let you go as well. Thanks for joining us.